Okay, we are live. Hello, everyone. Welcome to the Timing Research web show for September 15th, 2014. My name is David Kosmider. I'm the creator of Timing Research. And if you are new to Timing Research, we are building a crowdsourced sentiment indicator. Each week I send a quick 5-question survey to all Timing Research subscribers to gauge their thoughts on the current state of the market and near term, what's coming up. And then I send out a free report every Sunday afternoon to all subscribers that analyzes the data generated. So if you have any questions during the show, I have the Q&A app turned on, so just type in your questions and we'll get to them at the end here. This week we are talking about the 51st weekly report for Timing Research, and if you have not had a chance to look at that report yet, just go to TimingResearch.com/reports, and you can see the most recent report and all past reports. I have 2 guests with me this week: Craig Hill of TradingConceptsinc.com and John Seville of AcornWealthCorp.com. So Craig Dinkle was also supposed to be with us this week, but he had to do some last-minute traveling, and he'll be on a future show. So Craig Hill, if you could just give us a short bio about yourself.
Sure. Thanks, David. And again, thanks for having me here. It's an honor to be here. Well, my name is Craig Hill, and I've been involved in the financial markets since the end of 2005. I first started out trading options, learning about options and trading on options on equities, and primarily focusing on ETFs, and then moved over into the Forex market and then the futures market. And then once you start trading the futures market, you kind of stick with that market. At least some of us do. I did. It's just pretty much stick with the futures market, and then every once in a while I was doing some swing trading on just long calls, long puts. But I've been a part of the Trading Concepts team since the end of 2009, beginning of 2010. And I first started out moderating the live Forex room and then moved over into the E-mini S&P trading room. And but my main focus is price action and just really learning how to read and understand the story of the chart. So yeah, that's pretty much it. Okay. So thanks again, David.
Great. All right. Great. Thank you, Craig. John, if you could just give us a brief bio about yourself too.
Sure, absolutely, David. I started technical trading about 12 years ago. Coming from a fundamental background, we started to see, of course, the value of companies become much more heavily affected by the algorithmic and high-frequency trading. So we started getting very heavily into technicals 12 years ago, and we started Acorn Wealth Corp 7 years ago on the educational side. But our main focus, and my main focus, is really looking at the technicals and approaching the market more of the from a standpoint that it's a market. It's not a stock market, but a market of stocks, and that and the main things that we focus on in trying to predict the personalities of the individual companies that we trade is to take a look at where the smart money is going, and rather than trying to outsmart what the market's doing, to try and look at where the smart money itself is going and where the high-frequency trading algorithms are focusing, and trying to follow their paths.
Okay. All right. Great. So let's get started on this week's report. Again, if you haven't had a chance to see this one, just go to TimingResearch.com/reports, and you can download it. So I'm going to share my screen here so we can see it. And okay, so the main question of each survey is question number 2, and the first page of each report discusses question 2 and 3. Those are the multiple choice questions for the week. So question 2 asks, based on any technical and fundamental indicators you want to use, would you guess that the S&P 500 index will move higher or lower next week? And it's now September 15th through 19th. So let's start with Craig. What would you guess for this week from today's open till Friday's close?
Markets already pulled back. I'm looking at the S&P futures contract, the December contract, and the markets already pulled back. Friday we had the market sold off, it consolidated and eventually sold off, and so the market's already pulled back to run at 1970 level, and we had some prior resistance in there at the end of July, and we've got some prior support in there around the 20th, 21st of August, and then again we did see some initial buying in there on the 22nd that kind of started this move, to put in the all-time high there around September 4th. So we've pulled back in that area, so now it's just a matter of whether or not we're going to get continued, we're going to get some responsive buying in here, and so far today it's we had, even just today, we've had slightly bearish market internals, yet the bulls are continuing to be relentless and defend this 1970 level. So I don't try to predict. I just kind of I have certain expectations, and based on my technical analysis, and if it follows through, great. If it doesn't, then something else is going on, and I just kind of react instead of trying to predict. So I think that 1970 is going to be a key level. If we can continue to hold that, then chances are we'll probably come up there and potentially retest that 1990 area before the week's out. We'll see. So those are my thoughts.
So, but you would guess higher, you said?
Yeah,
right?
I would say higher by the end of the week.
Okay.
Maybe not necessarily new all-time highs, but higher from where we're trading at.
Okay.
Market opened at today.
Okay. Thank you. And John, what would your guess be for higher or lower for this week?
Yeah, I think that I agree with Craig. I think the 1970 level is quite important. We've got a 38.2 Fibonacci retracement level sitting at 1971. If you go from the lows of August 7th up to the highs of early in September. The main thing that I'm looking at when I'm trying to judge the movement of the market is to look at whether we're in an oscillating an oscillating pattern or a momentum pattern, and if we look at that leg of the journey from August through September, the S&P 500 was holding a very momentum-esque move, rallying up its moving 9 and 5 day exponential moving averages. The next key thing that what I'm seeing happening now is we've curved over and broken the back of that momentum move and have started to kind of curl in a downward way. So from what it looks like to me is we're kind of oscillating back and forth underneath those moving averages now, which warns to me that we're seeing the momentum possibly shift. The other key thing that I've been looking at on a technical level that's been a warning sign for me is watching the money flow. And one thing that we've seen happen over the last few months is, while the market's made these all-time highs, if you look at money flow compared, say, from July, when we were topping out around 1980, money flow is up around 40%, if not higher. Currently, we're at the same levels, but money flow is down to 20. So we're at 50% lower levels of basically the smart money buying in, which warns to me that there's an exodus happening from the back. So in terms of looking at the short-term levels, 1970 I think is something key that I'm watching, but we're considering that there is a good chance that could break. Looking at the 1960, if not 1945 levels longer term, and maybe 1960 between 1960 and 1970 by the end of the week.
Okay, so you would guess higher too, right?
I'd guess lower.
Oh, lower. Okay. Okay. And as you can see by the so the overall sentiment from the respondents this week was pretty strongly to the lower side. 61.2% guessed lower, 38.8% guessed higher. And then question 3 of the survey, we actually I changed the wording slightly this week. It was formerly a hypothetical bet, but I've simplified it to just be a question that asks everyone to rate their confidence in their answer to question 2, just based on a 0 to 10 scale. So the average of all guesses this week was just a little over 6, and the higher guesses actually had a slightly higher confidence rating overall on average. And so Craig, you guessed higher. What would you put for your confidence level?
Yeah, actually, I did take the survey. I think it was a Friday, and I actually set a 5 because, and I agree with what John was saying. We could end up, it depends on whether or not the market is going to hold this 1970 level. We've had some initial, we had a buying in there that started back at the end of August, and it's a matter of whether or not we're going to continue to hold this. If not, then my next key levels are 1960 and then 1937.5, right around 1940 level. I think John said indicated 1945. But I mean, I had set a 5 because this, momentum obviously has shifted. It's a matter of whether or not these longer-term bulls are going to continue to come in here and try to buy this market. And I think that 1970 is key. If we can break down through 67.5, we start breaking down through 1968, 1967.5, then we could see that could change everything, and we could end up finishing lower this week. So that's why, but then again, at the same time, we pulled back, about 20 points. So, we'll see. It all just depends on. I just look for the market to break key levels and then go with the momentum.
Mm-hmm. Okay. And John, what would you say for your confidence level 0 to 10 for your lower guess?
Yeah, I mean, I put it at a between a 6 and a 7, so I can say a 6.5.
Okay.
And mostly because you've got you do have those signs of that the bulls have been incredibly strong, but then you have that counter trend of the money flow and momentum shifting the other way. And I think Craig makes a very good point: is you've got to rather than as a trader trying to predict where a market will be at a certain time, you've got to react to the levels and not stay too locked into an intelligent argument with what you think should happen, but react to what is happening. One of the things I think that's important to point out is there's 2 very critical days in the market that often set key support and resistance levels. One of which is the first trading day of the month, which is open range, and whether the market breaks the high of that day or the low of that day, or typically in the S&P 500, that will quite often tell you the trend of where the market's going to go for the next 3 weeks. And then the next critical day that can often be a change or pivot in that direction is an options expiration Friday, which is coming up, of course, at the end of this week. So if we are it'll be very interesting to watch actually where the market goes next week following the range of Friday's trading. So that's going to be an important time.
Okay. Thank you. And back to the report here. On the bottom half of the first page of the report always has the full chart history of results. And then we go down to page 2, has the numerical values, and you can also download all the raw data and past history as well on the site. So then let's go on to page 3. Page 3 of the report always shows starts with the open-ended questions from the survey. Question 1 asks, what developing events, technical or fundamental, will you be watching out for next week, September 15th through 19th? What that might have a positive or negative impact on the S&P 500 and other U.S. markets. So, Craig, do you have anything else that you're watching for this week that might be interesting for traders?
Mainly the FOMC meeting announcement at 2 p.m. Eastern time. I think that could be, the catalyst that sets up the rest of the week, Thursday and Friday, but we do have housing starts on pre-market on Thursday. We'll see if I think that's going to be an important potential market moving indicator this week. So I think those two I'm looking at this week as potentially, moving the markets this week. So we'll see.
Okay. And John, did you have anything else this week that you're watching for?
Yeah, I think that fundamentally the markets has shown itself to be incredibly resilient, but if not more importantly, it's shrugged off a lot of fundamental data that you'd otherwise think would be big shocks to the downside that it's rallied into, and good news that it's shot down from. So I'm focusing mostly on the technicals, and that 1970 level we've been talking about is the key level, watching over the next couple of days. If that breaks, looking to see. We got a Fibonacci levels that coincide back from the April 11th low to the July high, and if you look, you can see you'll see there's a 50%, excuse me, a 23.6 Fibonacci level around that 1940 level, and then from the recent leg, there's also its 61.8 Fibonacci at the same level. So that's the key level around that 1940 area, 1945. That will be my next key thing that I'm going to be looking for if we do break down. So I'm focusing mostly on the technicals this week.
Okay, great. Now on to question 4 of the survey is different each week. Usually asks about some current event or some other aspect of trading. If anyone has a suggestion for a future question for the number 4 question of the survey, you can go to TimingResearch.com/question to submit your idea. This week is about the new Apple Watch. On September 9th, Apple announced the newest piece of major wearable technology to enter the market, the Apple Watch. Long term, do you think this product will reach a similar level of success for Apple as the iPod or the iPhone? And when possible, I go through and quantify all the open-ended responses. So this week, responses were almost 27% said yes, that they to this question, and about 73% said no. So then let's start with Craig. Do you have what do you think about the Apple Watch announcement?
I don't think it'll hit as much success as the iPod or the iPhone. I think I mean, I think it's probably more attractive to the younger crowd. I mean, not that I'm old, but I mean, after you turn 40, your eyes start changing, and honestly, the screen's so small you can't even see it. But I don't. I think their iPod, iPhone, and computer and the Apple computers. I don't think that's going to compare. That watch is going to compare to how much success they've had with the iPod or iPhone. I don't think so at all.
Mm.
So those are my thoughts.
Okay. And John, what do you think?
Well, I remember talking about this in October of 2012. When Apple was going under that big drop, and I think that the point we were talking about back then is that Apple's really kind of lost a lot of its drive, a lot of its ingenuity since the loss of Steve Jobs. When it had some amazing creations with bringing out the iPod and the iPhone, but that's what it's good at. It's a technology company, not a fashion company, and so the watch is kind of shifting in a different direction. And to talk about fashion, I remember noting to a friend while I was in a restaurant recently and looking around the restaurant, I pointed out that I think it was out of about 30 people, there was only 3 people wearing watches, because people have now have shifted to such a different kind of way of operating where we use our phone as our watch and our communication and our music device. And going back to a watch scenario is almost moving backwards in that trend. So I agree with Craig. I don't think it's going to be anywhere near as successful. I think there's much more competition out there, such as Samsung and other competitors. So profit margins, even if they were successful, are going to be much more compressed. So I think that I'd be surprised to see it surpass its previous creations.
Yeah, that's interesting. You point that out about people not wearing watches. I actually stopped wearing a watch myself about a year ago.
Yeah. Me too.
But I do think it's interesting for this and Google Glass that people are putting computers into more and more devices, and I think it has some interesting implications for development for where we're going to be 10, 20 years from now. There's going to be computers in everything, not just things we call computers today.
Absolutely.
Yeah. All right. So, I guess did either of you have any other comments you'd like to share?
Well, I think one thing that's worth keeping an eye on as well, you talked about things to keep an eye on in the coming weeks. One thing that's also interesting to keep an eye on that we do at Acorn Wealth Corp is like looking at the insiders, and there's been a lot of profit taking and things, but with the markets being at the levels that they are. But when we, having a focus on the smart money and looking at where that kind of institutional and insider action's happening, I went and had a look at FinViz recently and looked at what the ratio was of insider buying versus insider selling, and it's quite a big difference. In fact, if you look at the top 10% owner, so basically transactions from parties that have more than a 10% stake in the public company. You have a look at that ratio, for example. Just recently, there's been 8 buy transactions and 27 sale transactions. So you basically 20% of the action is happening on the buy side, and the rest is all sell. And if you go and look at the latest insider action, which is just looking at what the buy versus sell ratio is without the 10% consideration, it's basically very much the same. So we are seeing a big kind of swing in the sell side from what we deem the smart money, and that's reflected in the advanced decline line over the last week or so. Has also turned negative when previously it was making record highs. So there's just another couple of things to keep your eye on, of course, as well as the retraction in the overseas yields. So those are a couple of things that I'd be looking at.
Okay, great. Thank you, John. And I think that's about it for this week. So thank you, Craig, from Trading Concepts Inc. from being
Yep.
on, and
Thank you for having me, David.
Yeah, and thank you, John, from Acorn Wealth Corp, from being on. And everyone, remember to go to TimingResearch.com/current survey to fill out the survey this week, sometime before Sunday afternoon. And again, if you want to download the current report or any previous report, just go to TimingResearch.com/reports. So, and thank you for joining us.
Thank you very much.
Thanks.
Thank you.
Bye.